Hey everybody, welcome to your weekend review for the week of Monday, November 21st, 2022. And oh, what a week it was. Week started off pretty flat with the UMBS being down 3 basis points on the open. It is a very short holiday week with expected low volumes, which means a lot of volatility. Illiquidity makes it easier for fewer traders and smaller trades to have bigger impacts on the market. Everyone is resting this week for the following weeks when we get the CPI and the December Fed meeting on back-to-back weeks. The December 2022 Fed futures now see an 85% chance of a 50 basis point hike and 15% chances at 75 basis points. If we hike 50 basis points, then the Fed funds target rate will be between 4.25% and 4.5%. The December 2023, so a year from now, futures have a wide range of possibilities. However, the central tendency is for the final Fed funds rate to be between 4.25 and 4.5. So whatever happens after the announcement, expect that for the better part of a year. The second most common bet is between 4.5 and 4.75. This week, we don't have a lot of news coming. We have some Treasury auctions earlier in the week, and then we get jobless claims, consumer sentiment, and inflation sentiment on Wednesday. Something new that came in the news was some profitability out of mortgage bankers. For independent mortgage bankers and mortgage subsidiaries of centrally chartered banks, the MBA reports that the production costs exceed $11,000 per loan in the third quarter. That is a high number. That equals out to be a net loss of $624 on each loan that is originated. The average pre-tax production loss is 20 basis points in the third quarter, which is down from 5 basis points in the second quarter and down from 89 basis points 1 year ago. That's a pretty big difference. The net secondary marketing income decreased to 223 basis points in the third quarter, down from 243 basis points in the second quarter. Mortgage servicing continues to be a silver lining in the current rate environment with prepayments and delinquencies low. Mortgage servicing has been making up the difference for a lot of companies. After the bond auctions today, the market sentiment had the bonds down 16 basis points on the UMBS. We are hovering right around that Fibonacci line at 100.534 for the better part of a week. Can't quite figure out if that's going to be a floor or a ceiling. It's been playing both roles throughout the days lately. If you thought a national rail strike had been averted when the Biden administration announced a deal with the unions back in September, you can think again. One of the largest rail unions, representing 28,000 conductors, has narrowly rejected the deal. While 7 of the 12 unions have approved it, the rejection means a strike is still possible as soon as December 5th. If that happens, that could be a $2 billion hit to the U.S. economy and really mess up the holidays for retailers, for travelers, and for people trying to get goods to build houses.